So, let's look at the state of the US bond market today. Just because Trump appointed a new hawkish fat chair doesn't mean the dollar is safe. It doesn't mean the US bond market isn't in trouble. Now, the administration is doing everything they can to prop up the markets. Take the Trump accounts, for example. Every new child will get $1,000, and families can contribute up to $5,000 a year. But where do you think all the money is heading to? But imagine like this enduring legacy as the children who are born in 25, 26, 27, 28, and 18 years, when these accounts have been compounding for that period, the money goes into a broad-based index fund. Now, the whole scheme is one grand plan to prop up the U.S. stock market. The balloon must not pop. Now, Trump and Bessent, they're trying to engineer new mechanisms to keep future money flowing into the S&P. We are seeing an administration doing their utmost to prevent money from leaving U.S. markets, to lock future generations into U.S. equities, and to show the world we will engineer demand for U.S. stocks to keep prices up. So invest in us. However, this rescue scheme is just one of many. Back in July, Bessent announced the Genius Act to grow the stablecoin market, basically cryptocurrencies backed by the dollar. And the grand plan is to eventually funnel money into US Treasuries. The dollar now has an internet-native payment rail that is fast, frictionless, and free of middlemen. This groundbreaking technology will buttress the dollar's status as a global reserve currency, expand access to the dollar economy for billions across the globe, and lead to a surge in demand for US Treasuries, which back stable coins. The Genius Act is a win-win-win for everyone involved. This is the final lifeline of the US Treasury. After what happened in Davos, many countries and investors, they have had it with U.S. bonds. Why buy U.S. debt when Trump is threatening to punish sellers? We have funds in Europe selling off their U.S. debt. China is actively theorizing. The BRICS are also not buying U.S. treasuries for both trade reasons and to sanction-proof themselves. Now, there's a reason why gold has surpassed treasuries as the predominant asset. Central banks are terrified of dollar devaluation, and they are sick and tired of the threat of punishments. However, this puts enormous funding pressure on U.S. investors themselves. In 2025, almost a third of all federal debt is owned by foreigners. The dependence on foreign funding has gone from 5% in the 70s to nearly 33% within just 50-odd years. Bessent can't afford for a bond dump for foreigners. If a third of the market starts to move away into other assets, suddenly local U.S. investors, they need to absorb the shortfall of demand, and this could spiral out of control in a hurry. Americans themselves could demand higher yields because no one else is buying. This could even trigger the Fed to print money as a last resort. Now, deep down, Bessent is afraid of a demand collapse. He's scrambling around the world to find new buyers of treasuries, and he came up with this bizarre scheme. According to him, stable coins could grow into a $3.7 trillion market by the end of the decade, by 2030. The Genius Act would mandate these coins to be backed by short-term U.S. bonds. He wants to drive demand from the private sector for U.S. treasuries. Deep down, Bessent understands the world is de-dollarizing. Central bank buying from breaks all the way to Europe is going to dry up in a hurry. There's still a big disconnect here, though. The U.S. runs a deficit of almost $2 trillion a year. Even if 100% of the stablecoin market is backed one-to-one with short-term U.S. bonds, it would cover at most 2 years of deficits, and we are being very generous with that assumption. But stablecoin issuers themselves aren't even listening to Bessent. Even they know backing up all their holdings with U.S. bonds isn't a good deal. The yield is under 4%, is just too low to run their operations and to turn a good profit. Now, Tether, which is the biggest stablecoin issuer in the world, isn't fully backed one-to-one with U.S. government bonds. In fact, they hold a ton of non-treasury assets as part of their reserves. Only 64% of their holdings are in U.S. treasuries. The rest are spread across secured loans, corporate bonds, Bitcoin, and gold. Even the biggest issuer in the world doesn't see the value in going full treasuries. Now, Bessent relying on the stable coin market to be a structural buyer of U.S. debt is peak delusion. So many things could go wrong with this plan. Stable coin holders are part of the crypto casino. If Bitcoin collapses or risk appetite crashes, we could see a wave of stablecoin redemptions. And to meet those redemptions, Tether and other issuers will be forced to dump T-bills into the market. Then short-term yields will spike up in a hurry. Liquidity dries up, and now Bessent is caught without buyers on all sides. The backstop just won't work. TED themselves are buying more gold. In 2025, they bought over 70 tons of gold. That's more than China's official buying number. It's like a whole country buying gold. TED today now has a haul of around 140 tons of gold worth $23 billion. Even today, the company is buying gold at a steady rate, 1 or 2 tons a week, and they just won't stop. This puts even further pressure on the fate of US Treasury holdings. If a dump happens, guess which asset will be liquidated first? It definitely won't be gold. TED today has nearly 8% of their total holdings in gold. That's $13 billion in September last year. Today, it should be worth well above $15 billion, and total holdings might hit 10%. Let's not forget they probably added more to the reserves as well. This gold is not held in ETFs. It isn't paper gold. It's gold stored in vaults in Switzerland. It's hard to sell, and it's going to cost a lot of money to transport them out for sale. TED is holding gold for the long term, which means in a liquidity panic, when they need to raise money for redemptions, they will dump treasuries first. The cash will be drained, bank deposits will be sold, and US bonds will get liquidated first. This is a reminder to Bessent. You can't use financial sorcery to save the US Treasury market. The fundamentals are broken, and trying to rely on crypto bros to save the day is a very, very extremely dangerous gamble. The only way the real solution to stop the dollar implosion and repair the debt market is to reduce the supply of bonds, stop the deficit spending, and rein in US borrowing. But as we know, that's simply impossible today. Bessent is about to face a wall of refinancing in 2026. His plan of relying on stablecoins as a lifeline is too little too late. Now, the US is going to face a massive war of debt maturing this year. It's $9.6 trillion that will need to be rolled over. Bessent will need to bring in new buyers to prevent an implosion in the treasury market. And if buyers start to dry up, yields will start spiking higher. The only way left is for the Fed to slam rates down in 2026 to mitigate a debt explosion. Trump is now left with an impossible decision. Is he going to arm twist the Fed to cut rates to enable cheaper borrowing? Guys, that's only going to crush the dollar even further. Or will he sit back and see the debt crisis worsen? It's a lose-lose situation, and no stable coin scheme can truly prevent it. This is bad enough, but the story keeps getting worse. While Bessent's plan collapses China and Canada, they are working together to reduce their reliance on the dollar. Nothing helps China more than to see the dollar fall in value with the debt market on the brink of collapse. It allows China to convince more countries to exit the U.S. financial system. Now more than half of China's cross-border transactions are settled in the RMB. 15 years ago, it was near zero. It's not only happening in trade settlements. Half of China's overseas bank lending is also done in RMB. Chinese banks are loaning the Chinese currency to borrowers all over the world. This includes sovereign governments as well as big global companies. Now Beijing is firing on all levers here. They are boosting currency supply to their Hong Kong banks to get more loans out. The PBOC has also allowed the Chinese currency to strengthen beyond their usual low levels. They're trying to make the RMB more attractive for the world to use. And whether it's to buy and sell goods or for loans, China's end goal is quite simple. Keep the pressure up on theorization, especially when Trump keeps making fatal mistakes. Now, Kenya, for example, has fully converted their dollar debt into RMB loans. So instead of repaying dollars, they need to repay in the Chinese currency. Now, this will help them save over $200 million annually. That's the benefit for Kenya. Low interest rates to service the loan. Now, what's the benefit for China? Well, to earn the RMB, Kenya needs to trade more with China. Bilateral currency trade will grow, especially for Beijing. China can then internationalize their currency even further. And now China is wrapping up de-dollarization with U.S. allies who are tired of Washington. We are, of course, talking about Canada. The moment Carney gave his iconic speech on Davos, it was game over. He further re-emphasized that on his trip to Beijing that Canada wants to build stronger economic ties with China. Of these discussions and these agreements will provide great benefit to each of our peoples, but also provide an example to the world of cooperation amidst a time globally of division and disorder. We can expect more trade in EVs, crude oil, and other physical goods. Trade agreements have already been signed here, but the financial plumbing between Canada and China just got strengthened as well. Both countries renewed their bilateral currency swap agreement. Now, this is a very important facilities for both parties. Now, Canada easily access yuan for their imports by swapping with the Canadian dollar. This is a 5-year agreement that can be further renewed. It allows Canada to swap their local currency for up to $20 billion Chinese RMB. That's equivalent to $28.5 billion today. For China, they love it. It's a diplomatic and economic win. It promotes more trade with China and brings Canada closer to its ecosystem. And for Canada, it allows their economy to sidestep dependence on the world reserve currency. China is the biggest exporter to the world, and they account for over 10% of Canadian imports. And this amount will only grow in 2026 and beyond, especially when all the EVs come flooding in. And if a dollar crisis does happen, Canada doesn't need to debase their currency to acquire dollars and risk higher inflation. That crisis won't be necessary now. They can simply swap their paper for Chinese RMB to buy the goods that they need. It's basically an issuance policy for Canada against the whims of Trump and France. Now, when Trump threatened to punish Canada over the fear of a free trade deal with China, it revealed a primal fear of Washington. If both countries start trading more with each other, it kind of disrupts the entire dollar order. This will spill over to the entire dollar asset market that is truly propping up the US economy. Yes, we are in an upside-down world here. Unlike a normal country, it's US asset prices that's keeping the entire economy afloat. Canada's total trade with the US in 2024 was nearly $1 trillion strong. And of course, the majority of this trade was done in the dollar. Doesn't matter if it's imports or exports, it was likely done in the USD. China's trade with Canada looks small today at just 120 billion 2 years back. But in 2026, this number could actually double quite easily. And with the new currency agreements, we can expect more RMB settlements here as well. That's why Trump is so frustrated with Kane. Trade with the US will fall, which means fewer dollar transactions. Trade with China will grow, which also means fewer dollar transactions. So strap yourselves in. The US bond market is still in trouble. The dollar is still in trouble. Even with the new Fed chair, nothing has fundamentally changed here. And if Trump reverses his trade war, then maybe we will reassess the situation then. Until then, let me know what you think. Can Bessent stablecoin plan ever work? And how much will China trade grow in 2026? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.